Good afternoon, everyone. Last thing people want to talk about is wealth management, but as I say to my friends, I'm like Chandler from Friends. No one actually knows what I do for a living. So we'll get this started. My name is Wayne Dunne. I'm the head of client advisory at Walfrid Private. So we're a wealth management business based in Ballymount, Dublin, and our business has been in existence for 10 years now. And our primary client base is, of course, business owners, self-employed, and company directors, but we also look after individual wealth management as well. We're a proud team of 25 qualified and professional and extremely enthusiastic people, but our role is to help our clients to manage their finances in a straightforward and simple way. Simply put, our job is to help you to protect your wealth, accumulate wealth, extract wealth from your companies, and retain that wealth when you retire and into the generations beyond. I suppose a little about me. How did I bluff my way onto this stage today? I've been working in the life and pensions industry for approximately 20 years now. I started out in Irish Life in 2001, which was an amazing time, an amazing experience. But over the years, I've grown and done my qualifications to be able to provide financial advice to my clients around how they structure themselves. I suppose my ethos is to keep things as simple as possible. I remember doing training many years ago with an instructor, and he just kept saying this phrase, keep it simple, keep it simple, keep it simple. And that's how I view wealth management planning for my clients. If it's too complicated, you won't be able to follow it. If I make it too complicated, I'm not doing my job correctly. So working with me helpfully will simplify everything for you. But what do Walfrid Private and Director Wealth do? I suppose we break it down into three main areas. The first main area is protecting what's most important to you. Now, this is kind of the depressing bit of the conversation, but it's all about risk management and risk mitigation. So what does that actually mean? For people with families, that's simple things like having life insurance and illness cover to protect you should the worst thing happen. But that can also be used in a business context as well. What would happen to your business if you weren't around or you were too sick to work? What would happen to you and your personal circumstances if your wages were stopped for any reason, say you're medically unfit to work? There are risks to businesses as well, and this is where the tax efficiency side of things really comes into it, is what happens to my business if I pass away? How can you ensure that the business can continue to trade with your fellow directors or even family members taking over from you? And obviously, what's the point in having a business if you can't have some perks from it? So there is ways you can have life insurance and other benefits paid by your company in a tax efficient way. So it's not coming out of your pocket, but your business is covering that cost for you. Growing your wealth, and I get this all the time, I have to have wealth to start with to grow. But I suppose everyone has to start from somewhere. And what we try and do is focus on saving and growing wealth for specific purposes. If you have young children, for example, it's a really good time to maybe think about putting a few euro aside for when they get to college. And I know there's been a few announcements in the budget about capitation fees and everything, but at the same time, for a free education system, there's always costs involved, whether that's textbooks, accommodation in the city that they go to college, but also having your own money work hard for you as well. We know that the bank interest rate environment at the minute is not very good, and interest rates are increasing, but also inflation is very present in the market, as we're seeing with our energy costs and fuel bills. But that doesn't mean you shouldn't be considering medium to long-term investment as part of your wealth management. Planning for retirement, and I'm looking around the room here, and there's so many 30-somethings around, and I'm looking at myself and I'm going, oh my God, I feel so old. But at the same time, starting a pension is not the hardest thing in the world. It's the hardest habit to get into in the world. But you should always be saving money for your retirement. And again, this is one of the biggest tax efficient structures you can avail of, because you get tax relief on your money on the way in. You obviously get tax relief on the growth, and it will grow over time to provide you with some extra income in retirement. But we also help our clients when they're at that stage, when they've reached the end of their work journey and they've decided enough is enough. Now, whether you're 35 or 55, and I wake up some Monday mornings, that's how I feel. But ultimately, you have to plan. And I suppose what we're trying to say here is you can't hope to achieve anything if you don't plan for that eventuality. Just going to have a little chat about protecting what's most important to you. And I suppose this is the bedrock of my wealth management ethos for my clients. It's akin to building a house. You start at the bottom and build up. If you think about it and you think about your lifestyle, if you're earning a wage and all of a sudden that wage stops, what happens? How does the bills get paid? How does your mortgage get paid? How do you pay for childcare? How do you cover those costs? So while there is social welfare protection there, it's not going to make ends meet. It can sometimes mean you might have to sacrifice things to ensure that the central heating is on and so on. But we look at this in a very personalised way because everyone is very different. So there's no point in having a flat recommendation for everybody because every person in front of me today is different. So I get to know my clients both in terms of what they have in place and what they want to achieve, because you have to align where they're at now versus where they want to be. From that point of view then, when I'm able to identify their needs and requirements, that allows me to look and see, can we do this in a tax efficient way? We all hate paying tax. Like, show some hands if you like to pay income tax. No, I didn't think so. So from that point of view, we try and use structures that are available to us that mean that the government will be subsidising some of these things for you by giving you a tax break. And that's things like your life insurance and your wage protection and things like that. When is the best time to insure yourself? And this is probably one of the most frustrating things in my role. The best time to do it is now. And why do I say that? One, you're only going to get older. The cost is only going to get more. You might not have the same health status as you do now in 6 months' time. And I know only too well from clients and also from personal friends where illness has developed very suddenly and you're not able to do anything for them at that point. It's too late. That's why insurance is there. It's the what if. It's why you insure your car. But we insure our mobile phones, but we don't even think about insuring our salary. Like, there's something wrong with that equation for me. An iPhone is an iPhone, but your monthly wage is what you live on. That's why this is the most important thing we do. But we're obviously acutely aware that the interest rate environment and the banks have basically taken the biscuit for the last number of years in terms of interest they pay. Like, I know the European Central Bank have announced interest rate increases, but as you may have noticed, they're very slow to trickle through to retail savers. So people who are saving money, whether that's for a house deposit or even just saving money for a rainy day, they're not earning anything for it. You should always have a rainy day fund. Like, look, people speak to me about, oh, I'm happy to put everything into something. I couldn't in good conscience sit there and allow someone to do that. And the reason is, you don't know, you could be driving to work the next day and your car breaks down and it's an expensive fix. Where are you going to get that money from? That's just prudent financial planning. But it is all about making it work hard for you, and that's where the difficulty comes from. There's people around here that have invested money in stocks and shares, no doubt, probably people who've invested in crypto, and they've had moments where they're not able to sleep at night worrying about what's going on. No investment is worth that. So that's why ascertaining where you are in terms of your tolerance for risk and obviously what your objectives are, and marrying the two is probably the most important part of your committing to growing your wealth. And from there, it's choosing what you want to do. No one is going to sit to you and say, absolutely put everything into this. It should be about diversification, different investments, different things working hard for you, but doing it in different ways, whether that's by regular contributions on a monthly basis, saving for your child's education in 15 years' time, or by doing lump sum investments. Both have pros, both have cons, but ultimately it's about giving yourself the time to invest and letting it grow over a period of time. Because this is, I suppose, spend a bit of time on yourself, and it might take an hour of consultation with me to get a real picture of what you should be doing, but that's an hour well spent on your financial future. Retirement is a bit of a thorny subject. Most people think I'll never retire. I think I'd retire tomorrow if I could. But the thing is, how do you expect to retire? Where does your income come from? The Irish government gives a very generous pension at the moment, 260 odd euros, went up in the budget yesterday. But I know myself, could I manage on that money now? I don't think I could. It would also stop you doing the things you like. When you're retiring, life expectancy in Ireland means that you're going to live for another 20, 30 years approximately. Do you want that 20 or 30 years where you're doing nothing but staring at the living room TV, doing nothing but watching Netflix? I know when I retire, I want to travel and I want to visit my friends overseas and I want to go out for dinner. And the only way I'll be able to do that is by sacrificing some money now for time in the future. And that's much closer for me than a lot of you around the room today. But saving for retirement needn't be complicated. It's actually really simple. We save money for different things all the time. This is it's such a long way away, it's hard to get your head around sometimes. The government obviously want people to save for their retirement. And the reason for that is they don't want to have to interject and provide loads of welfare at a cost of hundreds of millions to people because they weren't able to save for their retirement. So they do two things. One, every penny you put in, you get some sort of tax break. Obviously, if you're on the higher rate of tax, it's more beneficial. If you're on the lower rate of tax, it's not as beneficial, but it's still a tax break. If you're a business owner, your company can pay for your pension provision, so you're not having to do it yourself. And it's a cost to the company with no benefit in kind. It grows tax-free. Does anyone remember when the bank used to pay interest on your savings? Every year you got your savings and you'd see a little thing called DIRT, D-I-R-T. 1/3 of the interest you earn will be taken in tax every year. That does not apply to pension funds. So again, they're giving you a nice little tax bonus there. And at the very end, you'll get a pot of money tax-free, up to 200 grand. I know what I'd spend 200 grand on, and it'd probably gone in an hour. But having a fund that allows you to take that money and enjoy your retirement is, for me, is one of the simplest financial goals you can have. The thing about pensions is as well, they needn't be too complicated. We're not talking about derivative investments or the Wolf of Wall Street or any of that kind of stuff. We choose the best investment managers in the world to manage our clients' money. I'm at the end of the phone, I'm at the end of email, I'm on LinkedIn, I'm on social media. If people want to speak to me, they absolutely can. But the whole thing is that when you're doing anything, it's important to stop and regularly check in and make sure that it's on target for what you need it to achieve. And there's two things with that. We're both accountable. If it's not doing what I said it would do for you, then I'm accountable because that's the advice I've given you. But if you're not doing what you need to do in terms of the contributions and time, then you're accountable. But if you're accountable for a plan, you are a lot more likely to succeed. But that journey of retirement doesn't stop when you finish. Like I know, as I said earlier, I'd retire on Monday if I could, but I can't. When you get to the end, you've got probably the most important financial decision you'll make. What do I do with my pension? And that's very much the biggest financial decision you'll make at retirement, because you need to ensure that you will have a steady stream of income for your retirement years, that you can enjoy retirement. But we also make sure that wealth retention should extend to your family. If you have a pension fund, it stays within the family. It goes to your wife, goes to your children, it goes to your children's children. So it can be a multi-generational passing down of wealth between you and your family. I suppose I've gone through quite a lot in a very short space of time there. The key message for me really is wealth management needn't be complicated. My job is to make it simple. You're all experts at what you do, so why not talk to an expert about what you need to do to look after yourself? I'm down at stand B4. Myself and my colleagues are more than happy to speak to you. My contact number and email address are there. If you want to get in touch with me privately and confidentially, we can have a chat separately. But at this stage, does anyone have any questions, thoughts, queries, rotten tomatoes to throw, boo me off the stage or whatever? No? Well, I think that's kind of it from me. Thanks very much for your time. Down at stand B4, if you need to have a chat, come on over and we'll have a talk. It's been great to speak to you, great to have the opportunity. Thanks to the exhibit, the organisers for this great event. It's been great to meet some very interesting people around the arena today and have some very, very good conversations. Having a cup of coffee with a wealth manager is not the end of the world. It might straighten a few things out with you. But if you want to have a chat, drop on down to stand B4. Thank you.